When it comes to cryptocurrency, everyone knows about Bitcoin. The arrival of Bitcoin ETFs has sent waves of excitement across the financial landscape, making the buzz around Bitcoin bigger than ever. Whether you're a crypto pro or just dipping your toes in, it's important to understand the difference between owning Bitcoin directly and investing in a Bitcoin ETF. In this video, we'll break down both options. First, let's dive into the benefits of real Bitcoin. With real Bitcoin, you always have 24/7 access, 365 days of the year, which keeps you constantly connected to the Bitcoin market. This allows you to seize every opportunity, day or night, weekends and holidays, to maximize your profit potential with buying and selling real Bitcoin in real time. Not only do you have 24/7 access, 365 days of the year, but you also have complete ownership, which gives you total control of your Bitcoin. Having complete ownership means there's no need for a middleman, like a fund manager or financial advisor. That's right, with real Bitcoin, you're in the driver's seat. You don't have to rely on a middleman. With complete ownership, you can take advantage of every Bitcoin opportunity on your time, putting you firmly in control. Now, let's jump into Bitcoin ETFs. In January of 2024, Bitcoin ETFs were approved by the SEC to be traded on the stock market. It's important to fully understand that a Bitcoin ETF is not actual Bitcoin. ETFs are funds managed by other financial institutions where they purchase Bitcoin for their fund. Investors can then invest in that fund. With the approval of Bitcoin's ETFs, Bitcoin has now gained wider adoption, propelling Bitcoin into the mainstream. As major financial institutions invest in significant amounts of real Bitcoin for their funds, the available supply shrinks, boosting demand and making it even more desirable. With all that said, Bitcoin ETFs may sound like an option for you, but here's the catch. Bitcoin ETFs are traded on the New York Stock Exchange, which confines you to limited trading hours. Let's do the math. The traditional stock exchange operates just 6.5 hours per day. Real Bitcoin operates 24 hours per day. The stock exchange is closed on weekends and holidays, leaving you with only 251 days of access per year. Access to real Bitcoin is available 365 days per year. With a Bitcoin ETF, you only have access to 1,631.5 total hours per year. But with real Bitcoin, you have access to 8,760 total hours per year. So Bitcoin ETFs offer a staggering 80% less access to seize the opportunity of market movements compared to owning real Bitcoin, which provides uninterrupted access every hour of every day, 365 days a year. In addition to limited trading hours, there's a chance you could be paying higher fees with Bitcoin ETFs. There are 4 types of fees to be aware of. 1. Expense ratio fee. 2. Total annual fund operating expenses fee. 3. Bid-ask spread fee. And 4. Custodian fee. Typically, stock market management fees could be as high as 1.5% annually, which could eat into your potential profits. Remember, we're talking about ETFs, which means you only have indirect ownership of Bitcoin, leaving you on the outside looking in. While it offers exposure to the market, you don't actually own the underlying asset, potentially missing out on certain benefits and control. So there you have it. Ultimately, the decision between buying real Bitcoin and investing in a Bitcoin ETF boils down to your individual preferences for control and accessibility. Each option warrants careful consideration before diving in. For those interested in investing in real Bitcoin, iTrustCapital provides the opportunity to buy and sell 24/7 with the tax benefits of an IRA. This combines the growth potential of Bitcoin and opportunity to maximize your profits. Discover the simplicity of directly owning real Bitcoin. Visit iTrustCapital.com.